We are here in my apartment again this week in COVID-19 prevention mode to bring you your latest Crypto Capsule, the weekly recap of all the developments in the global crypto ecosystem that you need to know. However, this week your Crypto Capsule will exceptionally not be less than 60 seconds, but will rather be a special extended version. There are just too many important and game-changing developments that took place last week that I believe you need to know. And after watching this, I'm sure you will agree. Are you ready? Here we go. Bitcoin has continued its ascent and been hovering around $9,500. It was trading at less than $5,000 less than 2 months ago. On the market side, legendary macro hedge fund manager Paul Tudor Jones announced that he is buying Bitcoin as a hedge against inflation he sees coming from central banks printing money. He told clients that Bitcoin reminds him of the role that gold played in the 1970s during the Great Inflation. Not surprisingly, open interest in Bitcoin futures on the CME reached a new record high last week. Many view this as another example of increased participation from institutional investors. Separately, VC firm Andreessen Horowitz announced a new $550 million crypto fund that will invest in various verticals of crypto networks and businesses, including decentralized finance. This comes on the back of the annual PwC Elwood Crypto Hedge Fund report that showed that the total AUM in crypto hedge funds has doubled in the past 12 months, with family offices and high net worth individuals comprising over 90% of investors in such funds. Following months of legal battles with the US SEC, the CEO of the messaging app Telegram, that has over 400 million users worldwide, announced the messaging app's active involvement in its new blockchain called Tone is over. The SEC claims that the 2018 token sale by Telegram that raised over $1.7 billion consisted of a sale of unregistered securities. The Libra Association announced that Temasek, the Singapore government-owned entity that manages over $200 billion in assets for the Singapore government, has officially joined the association. This follows the news that the Libra Association has hired Stuart Levy as its new CEO. Levy was previously the chief legal officer of HSBC, and before that, was the Undersecretary of the Treasury for Terrorism and Financial Intelligence during the Bush and Obama administrations. On the policy side, the European Central Bank announced that it will be seriously exploring the optimal design of a central bank digital currency so that it will be well prepared should it ever take a policy decision to issue one. However, the ECB explicitly mentioned that it is worried about the survival of banks if people can convert commercial bank deposits into CBDC at a rate of 1-to-1. The risk, according to the ECB, is that people find far more attractive to hold a risk-free CBDC rather than bank deposits, especially during times of crisis when we may have bank runs of unprecedented speed and scale. In related news, it was reported that the credit card company Visa has filed a patent aimed at digitalizing physical fiat currencies. And finally, the Cayman Islands has put forward new legislation to regulate the crypto industry, and China's central bank confirmed in a statement that its pilot for a central bank digital currency will start soon. See, I told you there were a lot of important developments. That's all for this week, folks, and see you all next week, most likely still from my apartment.